So our strategy that we've spelled out are the best route to developing our projects is through targeting brownfield assets. In fact, if I step back, I mentioned earlier on that there's a guiding philosophy to our projects. It talks about 4 key elements.
Yeah.
You want a commodity that has got sound fundamentals and good outlook from a price point of view. 2, you want a project whose cost proposition will put you in the first or second quartile of the cost curve. 3, you want to have projects that you can reasonably bring into production in a foreseeable future without requiring massive CapEx.
Yeah.
And then the 4th one is you want scalability.
Or at least cheap or non-dilutive CapEx, right?
Because if you need billions of dollars, where are you going to raise the money, right?
Yeah.
Especially if you're a junior. And then 4th point is you want scalability. Vanadium ticks all of those boxes for us in South Africa. It's a commodity with good fundamentals, as we talked about earlier on, from a demand side, from a supply side. In South Africa, we're really well located there.
Well, you are, but again, there's perception of the market in terms of country risk. Because there have been problems at various points in South Africa.
I can come to that, but if I may for a second, I think you got a commodity whose supply outlook is concentrated mainly between 3 countries: China, South Africa, and Russia. With South Africa having the largest high-grade primary resources, we always say if you want high-grade vanadium resources, you're going to have to come to South Africa. Because that's where we've got the combination of scale and grade. But also the distribution of vanadium resources globally and the distribution of the production of vanadium, it's such that, in our view, if you look forward to say, where does new supply come from? If you don't have grade that allow you to build a primary plant like we have in South Africa, you have to build a steel plant, which requires billions of dollars, which is why you see most of the production in China and Russia being of that nature, co-production steel plants, which are expensive to build. New supply, in our view, is not going to be dominated by the steel plants or pig iron plants. It's got to come from primary producers. But if you're going to do primary production, you got to find grade. And we say grade is going to come in.
Always. I think that's true of a lot of commodities. I agree with you. And so, just very quickly, you're selling most of your product to where?
50+% of our production goes to the US.
Goes to the US,
yes,
okay.
But it's predominantly still the steel sector at the moment. So Matthew, we were talking about what this philosophy and how we go to brownfields. So when we focused on vanadium, and with our project in Mokopane, we did a scoping study, we did a pre-feasibility study. What that showed us, we had a project that required $300 million. It was a high-grade vanadium resource, $300 million CapEx to build mining plant. Gives you a good IRR of 25%, assuming a vanadium price of, call it $33 per kilogram V. Nice project, right?
And what's it been averaging in the last 5 years?
Look, I mean, vanadium prices have gone as low as $13.50.
Yeah, no,
it's gone as high as $127. So I couldn't tell you exactly what the average is, but I'll tell you that
it's about that.
At $33, we're comfortable we have a project that is good, right? But the point I'm highlighting here is that you're a $20 million market cap company or £20 million market company. How are you going to raise $300 million, right? Even though with a project that is solid, it is at that point for us where the epiphany of brownfields hit, which is if I can find existing facilities that I can convert into primary production for vanadium that are cheap and I can do it cheaply, then fantastic. And then South Africa is unique in some respects in terms of vanadium because historically a lot of our industry was built on a vertically integrated basis. You didn't just have mines, they had mines and processing plants. But what happened over like a 30-year period, you saw globally a shift upstream. So your BHPs, your Rios, many of these companies, they decided to focus only on mining. They saw the Pilbara expand capacity. They would just mine and ship it to China and let China process it. It left a number, that kind of migration left a number of facilities, downstream facilities, underutilized, in some instances, not profitable, etc., etc. That is, for us, the opportunity when we talk brownfield. It's, can I acquire a facility that is either not being utilized or underutilized and combine it with my resource base and produce vanadium cheaply. The acquisition we did of Vametco was as a result of that strategy. We acquired it initially for $16.5 million in partnership. Right, it's a plant which just last year delivered $107 million in EBITDA. Right, and it's a low-cost producer, and it's a plant which we're now scaling up in terms of its production throughput. The same thing when you think of Vanchem, we thought, okay, what other plants are out there that we can get our hands on? We've got the resource base to supply them. We've got the logistics infrastructure to link our deposits with the plants. So Vanchem was the next one. That's why we did Vanchem. And between the two of them, we create processing capacity that would have cost us many times over to build on a greenfield basis.
Right, okay. So I understand the financial logic there.
Yeah.
But in terms of a strategy for the business, we touched on briefly in terms of what your plans are in terms of the energy space as well. But how do you describe your strategy? I mean, are you kind of logical, methodical about this, or would you describe yourself as aggressively confident about the way you're doing things?
We maybe it's part of function of my upbringing and my learning.
Yeah.
We tend to be very fact driven,
right.
Very analysis driven.
Where does that come from? Your upbringing.
I studied actuarial science. I worked in a firm like McKinsey & Company, and that's the sort of stuff that we did.
Okay.
And when we decided that vanadium was a market we're going to focus on, we bought Vametco at a time when vanadium prices, at least when we agreed the deal, vanadium prices were about $13.50, right? And yet we thought, even if we have to subsidize this plant for another 2 years, it would still be worth it. What gave us the conviction was a lot of work that we had done around the market structure to come to the conclusion that this is a market in a structural deficit, a deficit that will continue for a while, number two. And number three, a deficit that, quite frankly, to close it, is the opportunity of primary producers who have existing production capacity. And it was hard to convince people, so the deal wasn't easy. When
By
we
people,
did it
you
to
mean
finance.
the then owners?
No, to convince financiers.
Financiers, okay. Right.
But in the end, we got it done, and I think we've been proven right in respect of that. Another part of our strategy, so the brownfield strategy is a very clear strategy that says target brownfield assets and make sure that you invest in them, you refurbish them as necessary, and you maximize your throughput through them. Second part of it is we realized 90% of the vanadium demand is coming from the steel sector. What other sources of demand are there?
Why don't you tell people about VRFB, which is Vanadium Redox Flow Batteries?
Yes.
So start with that.
So
what's the difference between them and lithium ion? Maybe start with that, because I think that's what people understand.
Okay. Both of them are batteries, which means that they store energy. Okay, and you charge them, and then you discharge them when you need the energy. Vanadium redox flow batteries essentially store that energy in vanadium electrolyte. Vanadium is one of those.
So it's a kind of liquid.
It's liquid.
Yeah.
Vanadium can exist in 4 different oxidation states and quite stable. So the concept of vanadium redox flow battery really is a reversible oxidation and reduction reaction between vanadium in different oxidation states. So from 2+ to 3+, from 4+ to 5+. So the charging and the discharging is the movement of ions between these different oxidation states.
Right.
What's good about it is that it's one element you're using, so you don't have the risks of cross-contamination.
Right.
Secondly, what's good is the fact that the way you store the electricity in these tanks, you can scale them up in terms of the amount of energy you store by just increasing the size of the tanks without duplicating the entire system. Okay.
Right.
So they're flexible, they're scalable, they're intrinsically safe.
So less risk of fire or overheating.
You don't. I've never heard of any vanadium battery catching fire.
Right.
They can operate at fairly robust ranges of temperature, and they are long lifespan.
So less degradation.
No degradation.
No degradation. Okay.
And you can run this for 20 years plus.
So uses for something like this, you were talking about the much longer life.
Yes.
Larger.
Yes. Safer
and
scalable.
So different applications to potentially lithium ion.
Lithium
at the moment,
advantages are typically is high energy density, and lithium is cornered mainly the mobility space, right? You're not going to put a vanadium battery in a car, right? So mobility, your cell phones, your laptops, right? Yeah. That's typically its space. In the stationary, when we talk stationary storage, lithium still plays in that space, but it's typically are in the short duration space, like frequency regulation, for example. Once you're going long duration and long lifespan, that's a space we believe favors vanadium redox flow batteries.
Right. So how much of a vanadium redox flow battery would be vanadium? What's the potential size of this market? Have you done any work?
Yeah, we've done a lot of work on that. In fact, on our website, we've got a webinar, Energy Storage 101, which does a deep dive into
what's the URL?
www.bushveldminerals.com or bushveldenergy.com. Both websites will give you access to
worth a view. Okay.
It's worthwhile because it's quite a deep dive into this, into the applications, of stationary energy storage. So maybe just to explain very high level, you use if you've got a utility and your load. Your load in a country for energy is not flat, right? Yeah. You've got peak periods and you've got off-peak periods and you've got another peak periods. In South Africa, for example, typically morning and evening peaks, afternoon off-peak. Yeah. So how do you design your generation to meet that? Typically, you got what is called base load, and which is not designed to be at the peak level. Yeah. And then you supplement during the peaking periods with peaking capacity, right? And these are typically, either gas plants or diesel generator plants, etc. What energy storage allows you to do is it can help you to flatten. In off-peak periods, you can store the excess energy, and you can supplement your requirements during peak periods, right? Equally, as you introduce more renewable energy to the grid, you need to smooth that entrance of that into the grid. Energy storage can help you with that. Thirdly, in some markets like South Africa, you're generating your peak generation capacity for solar is during the day, off-peak. Yeah. If you're able to store that power, you can make it available in a more flexible way during peak periods. And there are a few other things like, your transmission, CapEx deferral. When you've got, transmission infrastructure, think of it like a highway. Right? If you get a freeway that gets clogged in the morning and gets clogged in the evening, and you've got 4 lanes, you don't build a half a lane. Yeah. You're going to build 2 lanes, right? Or 3 lanes, extra lanes. But if that same 4-lane freeway during the afternoon is virtually empty, building an extra 2 lanes, is not quite efficient. Yeah. So what if you could distribute that traffic regularly during the day? The result of that is that you don't have to build that extra lane, so your CapEx for transmission expansion, you can push it out more. So the world over, utilities are recognizing the value of stationary energy storage. It's so big a market, it's expected by 2027 to be in the order of $50+ billion.
What, globally?
Yeah.
Globally, okay, right. So
you're talking about something like 100,000 megawatt hours of new energy storage deployments per year. Right. Now, there will be different technologies that take a share of that market. Yeah. We estimate that if vanadium flow batteries capture only 10% of that market, you will need about 55,000 tons of vanadium to support that. That's more than 50% of last year's total production.
So, but there's ifs and buts in there, okay? If it gets that. So that VRFB style of battery is not there yet. Is there? Well, you tell me. Is there much of a take up?
What do you mean is
I mean, lithium ion. Everyone's gearing up lithium ion, and there's a few other options. That people focus around that. But where is this designed today?
So what if I tell you that today, the biggest battery installed with more than 4+ hours storage capacity in the world is a vanadium flow battery built by Sumitomo, 60 megawatt hours, 15 megawatts for 4 hours in Japan. The biggest battery being constructed in the world today is 800 megawatt hours, 200 megawatts for 4 hours storage.
Right.
It's vanadium redox flow battery being constructed in China. And it's not a technology that's in a lab. It's a technology that is in commercial deployment.
But are these one-off batteries to sort of see what sort of scale they can get to, because they are going to rock. You mentioned like some pretty Sumitomo, big name, a lot of money. So are they planning to roll this out? Are they going to be manufacturers, or is this just, like you say?
There's several companies that are manufacturing vanadium flow batteries today, and the point I'm making is that they are in commercial deployment today. They need to scale up, of course.
Right.
But what's going to drive the scale up is more uptake of the variable systems. Right now, we are seeing signs of that growing momentum. So I'll give you an example.
Please.
In South Africa, our utility has announced that they're going to be procuring 1,400 megawatt hours of battery energy storage.
Right.
Funded already, right?
Have they decided on the technology that?
No, it's batteries. Multiple batteries will bid in that space.
Right. Okay.
But it's long duration type. We believe that vanadium batteries have a very strong proposition there, not to mention a strong local content proposition there. The World Bank has announced a program for 17,500 battery energy storage by 2025 in low and middle income countries. And they've committed $1 billion. They'll mobilize another $4 billion towards this. It's a terrain which will be occupied by multiple technologies. So I'm not saying that this is going to be solely vanadium's terrain. But the numbers I told you, I said if VRFBs were to capture even 10% of that market, this is what it means. The point about it is that it's such a big deal for vanadium that the entire vanadium industry, in my view, should be doing everything they can to support the VRFB opportunity. The technology is there, the scale up is what is required, and what we did in setting up Bushveld Energy is precisely to drive that going forward.
Well, I guess you've adapted your strategy since 2012 to understand what's coming down the line, but what you're saying is you think there's a big bet to be made on that battery
We think
technology.
there's a big low risk bet. Let me tell you why low risk.
Please.
Because our demand is anchored in steel making.
Yes.
If batteries never existed, we still have a fantastic story anchored in supplying to the steel market with a low production cost basis.
For sure.
Right? 2, it's low risk because the capital expenditure required to play in that space is much, much smaller relative to the capital expenditure incurred in building mines and processing infrastructure. I'll give you an example of that. To build a processing, a chemicals, electrolyte manufacturing plant capable of delivering 200 megawatt hours worth of electrolyte a year, that will cost us $10 million, right? That equity included $10 million to build, and that will use about 1,100 metric tons of vanadium, okay? To build a mine and a plant that supplies 1,100 tons of vanadium, if I just do a ratio, simple ratio, you're talking about $100 million. So the capital intensity down there is very, very low.
Yeah.
And if you take that into account, for us as a company, it's a no-brainer to say, let's do everything we can to support this emerging industry, which is not only attractive for its demand strengthening proposition. Commercially, we think it's potentially 10 times as big as the commodity market.